Good morning everybody, it's Chris here from Serene Education for the 4 major analysis update 25th of May 2011. Let's start with the euro against US dollar. Let's have a look at our daily time frame. Okay, so push from the underside of the 50 and 20 period moving average at the 143500 mark has seen price fall lower and subsequently tested the previous swing, and we fell even lower in some cases to the 1400 mark. This being long-term support and resistance. Notice here, resistance in March. Again on the latter part of March, and then it broke above and continued to the upside, and subsequently we're now testing that particular area again. Yesterday's small uppish candle confirming a bit of consolidation at this 1400 mark. It's natural, and then as of last night we had another bearish engulfing. Now as things stand, we are now going to be retesting 1400. If we see this candle, the daily candle, break and close lower as it did prior but didn't hang, if it closes lower than the 1400, then we'll definitely get a confirmation of further negativity in this particular pair, and we should see further extensions to the downside. If I do a fib projection, you'll notice that the area at 1400 is the 38.2% fib area, a very strong Fibonacci area, projection area. And then if we break below that, then obviously 50% would be tested, 61.8, and 100 at 13.4500, which would be the 100% extension of the initial move to the downside. So that would be our ultimate target, 13.4500. And if I just zoom out, it's 35.400 is also on a very strong support and resistance line in the past. Resistance, resistance, support, resistance, 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 support, support, bang, and off. So very strong area, that. Very strong. So let's look for a break below that and then definitely see confirmation downside movement. CTC, however, on this time frame is still bullish. Remember that CTC is very much a lagging indicator, so on a daily time frame we're still bullish. Got to wait to see definite break. We should get confirmation soon if this trend to the downside continues and we're still posting lower swings. So intraday 1400 would be the target to break below. As you can see now on a 4 hour, we are on our way to it after a number of shooting stars in the latter part of yesterday's trading, and then we've failed to break higher than the 20 period moving average, and we saw another swing low created. So what we have now is we have this downtrend with lower swings on each occasion, showing us confirmation of further downside movement. Okay, so 1400 would be the ultimate area where we want to see price break and trade below. If we can see that, then we'll definitely confirm further downside movement. CTC on a 4 hour is giving us the all systems go, and it is exactly the same for the smaller time frames. I'll also put this in 1400. There we go. On an hourly, Asian market trading at 5 a.m. GMT this morning, we had a lower swing and we've seen a bit of movement down from a prior high that we saw last night on the US session, where it topped out and fell to trade higher, and we had a lot of wicks, and then we've seen price revert to the downside due to that. So for the euro, look for a break and close lower than 1400 to confirm further downside movement. Otherwise, what we could expect is to see another bounce like we saw a day or two ago, and then a consolidation and then a reattempt to the upside. So we need a juicy down candle, preferably on an hourly, break lower, and we'll get to see this trading further down to the downside. There we go. That's the trend for an hourly chart. You can see that the swing here, if it holds up, then we're going to see this momentum pushing it lower. It's trading below all the moving averages, was also very important when trading something that's short. Just factor that in when you're looking at potential trades this morning going into that. Okay, next up is good old sterling against the US dollar. I'm just going to have a look at the daily time frame. You can see the momentum still to the downside. Yesterday we saw an up candle, bit of momentum shift. Notice that the downtrend lower swings posted on each occasion. So you can see the momentum drive is still lower. Trading below the two important, we've had a crossover and the CTC has gone red across the board on the smaller moving averages, time moving averages, and 1600 as it stands now is still a potential target for this, as we've now broken below all the moving averages, and our next ported call would ideally be the 1600 mark, because it's been a very strong support and resistance level in the past. So 1600 would still be our target. However, notice how we're getting the slowdown. See how momentum drive, unlike before, quite bullish to the downside. Here we're getting, it's still moving but consolidating almost sideways to the downside. It's almost being squeezed as we get closer and closer. So it'll be interesting to see. I mean, this candle here did help a lot. Ideally, if you want to see this potentially bounce to the upside, then I would ideally like it to be trading well above the 50 and 20 period moving average. CTC has gone red, so we should be looking for further opportunities to the downside. There is a support area for this pair. Notice the this area here, and if I could draw a straight line, let's go with that. There we go. So roughly around the 1200 mark, there's a small support area here on this. We need to see a break and close lower than that to definitely confirm further downside movement. Otherwise, we're just going to get wicks, and there has been a base formed here in the last couple of days like that. So we definitely need to see further confirmation. Break of that would be ideal, or we could look at that as a potential target intraday. So where price is trading now, it's 16,5700. Then we could look at 16,1200 as a potential target. So let's put that in. 16,1200. There we go. On a 4 hour is roughly there. We could look at the bottom of the wick. If price fails to trade high on the 4 hour, you notice how the 4 hour, the 50 period moving average is acting as a beautiful resistance level for this pair. Trading below the institutional moving average, and the CTC is well extended in our favor to the downside. So you can see the momentum drive, resistance, 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 and we're now pushing lower. So this ultimately here at around about 16,1200 or the 1610 would be our preferred target if price is unable to break higher. If price were to break higher, it would need to break this prior resistance level, the ceiling level here, and post a close above 200 to be considered bullish. We have a blue candle and blue arrow and blue candles, but we don't have it across the CTC, unfortunately. That will only come once we see a definite close, a break higher than the 50 period moving average. And then what we could do is probably see price reattempting 16,2500, and then ultimately the other prior break run at 1635 or 16,3300, and then the 200 period moving average to the upside. But until such time, we need to see a break of at least 1618 in this case. A failure to see price trading above 1618 would obviously confirm that we are now seeing 1, 2, 3, 4, 5 consecutive 4 hour candles of resistance, which is quite strong, and then we should see price revert to the downside because of that. So let's look at the small time, 1618. There we go. So that's going to be our resistance level, and then 16,1200 I mentioned would be our first target. Ultimately, targets for this pair would be down here at 16,070. We've been there before, but you can see that we're trading below all the moving averages, and looks like we're reattempting a lower swings. That swings lower than that. The swings lower than that. So you can see the direction at the moment now for this pair is low. Ultimately, I'd like to trade lower than this previous support here at 16,1500. Break below that would definitely confirm downside movement for this pair. CTC is in our favor. if not a bit all over the place. But if we get a definite break below the 50 period moving average, then we'll definitely see a potential to downside candle for this. Next up is the US dollar against Swiss franc. Let's have a look at the daily time frame. Here again, we've seen price moving sideways, very small range. This is after a attempt recently trading higher, support, breakout, resistance, another 50 period. Now we've seen price staying relatively high. We haven't seen the break lower since the previous test of a price support area. That resistance, we've seen price just pull back slightly, and it seemed as though we were getting another retest of this. 50 period moving average is not too far off as resistance. Notice that we're still trading below all the moving averages, and the CT is well extended, so we know that this particular pair is very bearish at the moment. And the one thing we need to notice is the trend line as it stands now is pretty much in play. So heads up, people, because we could see we had one there, a resistance level, another resistance, and we're testing it again, and we failed to see that break. We could see something happening around here. Ideally, if that's the case, and we're seeing the US dollar being pushed to the downside, then what we want to do is see a break of this area here, this small support area that's formed. 1, 2, 3, 4 candles of support at roughly the 87700 mark. 877. Need to see a break and close lower than that. So let's put that in our smaller time frames. 877 there on an hourly, 877 on a 4 hour. So as you can see, if I go to the hourly chart, you can see the prior support area have quite strong there. So as it stands now, look at these. It's very whippish, even on an hourly chart. It's crazy, this. So we want a definite confirmation signal close. Otherwise, we just get caught in all this whipstillness, and we just don't go anywhere at all. And it's not worth trading. You can see through the whole period on hourly how we've had so much indecision. Now it's gone blue again, quite strong, but you'll notice that this highs here are still lower than that one over there, so confirming that momentum is still shifting to the downside, however in a consolidation range. So ideally what we want to do is see a definite either upside or downside. We don't want to be trading consolidation because we're not really making any headway. So ideally we'd like to see a break and close lower than 8770. A very strong one, so on a bigger time frame, the stronger the candle negativity wise, then obviously the better confirmation of further downside movement, because we don't want to be caught in this again. This is ridiculous. So just for this one over here, straight away 8770. If it fails to do that, then obviously there's no shorting opportunity. However, you'll notice that this pair has made a number of attempts to the upside and failed. So we had a number here there again at 8870. Ideally, if we're trading above that, then we want to see a definite clear indication of further upside movement and look at a potential target at 8930, but very whippy. It's the type of trade that makes me really worry a lot when looking for trade setups. So in my eyes, 870, nothing below that, then I'm not interested. Got to be trading well above this in order for me to be slightly interested. Even then, I'd have to look at a lot of indicators to probably give me an idea, a clearer signal, because it's very whippy at the moment on this particular pair. Last pair of the day, let's have a look at the US dollar against Japanese yen. So daily, noticeably you can see the US dollar gaining a lot of strength against the yen in recent weeks, posting higher swings, and now still trading below the 8200 mark. It's kind of stagnated all the way. The last couple of days it's been failing to break above that. The 50 period moving average holding strong. Yesterday we had a spinning top indecision candle form, and still prices failing to break higher. CTC, however, is still red. We have got a blue arrow and blue bars, so it's just telling you heads up. If we do get a break soon and close higher than 8200, then we're definitely going to see further upside movement. That's all it's saying. Just be aware. Look for a break confirmation, because there's potentially a setup to the upside. However, if it fails to break 8200 and we see today in particular a down candle where we see the US dollar lose ground against the Japanese yen, then what we could be seeing is a evening star formation, not a really attractive one, but even a classic three candle formation where you're having an upside, indecision, downside, and this would confirm it. The at a resistance level, a strong resistance on a trend would confirm that there is a change in market sentiment and we could see downside movement. So just keep that in mind. Okay, so if we see another equal drive to the downside and close lower than this candle here, then what we could see is an evening star formation. And we could see price reverting to the downside. We have the price swing here, for example. That could be an initial target to start with, 81.50. Thereabouts, 81.50 would be a good idea of it. Break below that would take us below the 20-period moving average, and then we could look at the price swing here at roughly the 70 mark, and there again down here at 80. We've been there before. There's no reason why we don't have to go there. And we're still negative on the CTC. 200 still above us institutionally, so we're still negative on this. News has been favorable in Japan last night. They're saying that the recovery is quite strong at the moment now. Japan is doing pretty well. Let's have a look over here. The Bank of Japan government, Shirakawa, is saying that the economy is already showing signs of recovery, which is a good sign. So that's not the only factor, but it's a good sign for Japan, especially after a couple of months ago we had that horrendous earthquake and tsunami that followed, and many lives were lost, and the economy has taken a really bad hit because of that. So it's good news, favorable news for their small economy. So good to them. It's good to hear that. So 8,200 would be our ceiling level intraday. So let's put that in. 8,200. Ideally, like to see progression above that. Failure to do though, we'll obviously just see price reverting to the downside. So there's a lot of wicks. You can see that 8,200. We had a lot of prior indication of trades trading higher than that. You can put those down now. So ideally, on a bigger time frame, you want to see a close above 8,200. Say a 4-hour, an hourly chart, but on a smaller time frame, your 30s, 15s, and 5s, you're obviously going to get wick movement in between. So if you want to factor those pips in, then in this case, roughly around the 8,215 mark would be where you ideally like to see price. Otherwise, the last thing you want to do is be faked into a trade. Like here, for example, if however you put your candle plus a spread on top here, you would not have been faked into that. So remember that. Always add your spread to the top of the candle wick that you want to get into. A lot of people don't know that. They don't trade like that. It's important to do that because the brokers are factoring in that spread on top of the entry candle. So if you go and you say, bang, okay, I want to get into that candle, and you just go for the high of that at 82.07, factor in the spread depending on which broker you're using on top of that. Otherwise, they're already factoring the price onto it, and you'll be triggered already before the 82.07 mark happens, and you're going, well, why am I getting triggered in? And it's self-explanatory, so just be aware of that. So yeah, 82.15 on a small time frame would ideally where you want to see price trading above to give you an idea of price moving higher. Trend direction, you can see here, for example, the US dollar is testing the 200-period moving average and the trend line on a 30-minute time frame. So let's have a look and see if we have a break of that trend line. If the trend line holds strong, and it has been a strong one, we can see this trend's been holding strong since the 17th of this month. And we could see a bounce to the upside, so a clear break and close lower than the 200-period moving average would definitely give us an idea that we're seeing a bearish sentiment moving in now. We can see a lower swing has already formed and an even lower one recently. So we're getting high, lower swing, and if we break lower than here and see a confirmation pullback, then we get a lower swing, and then we should be seeing the US dollar falling. And this is primarily because we're now trading at a daily ceiling level 8,200. So it has to be trading above 8,200 to even be considered bullish long term. Otherwise, all we're going to see is correction, consolidation, and a potential down move to at least the 81.50 mark today. Okay, so that's it, guys, for today. Hope you have a fantastic trading day. Keep your trading simple, guys. Look at trend support, resistance. They will dictate price movement. It's paramount. All these templates that we use, etc., are just add a confirmation signal. So look at your trend direction, where price has been trading and relative to the whole chart on a larger time frame, and then break it down. Say, okay, well, this is where we are on a daily. There's a resistance level here. There's a potential for further consolidation. We need to see a break higher than that particular resistance level on a bigger time frame to confirm further upside movement intraday. And that's what we want to do. We want to be trading fluent, non-static, just direction. So if we can buy that time and look for a confirmation, definite breakout, that's where we want to trade. The momentum that's driving that breakout. So just remember that when trading long term and looking for potential setups. But other than that, have a fantastic trading day for this Wednesday, and all that remains to say is trade serenely.